to me, the goal of these privacy tools should be, let's make it easy for the average person to be pretty hard to spy on. With mass surveillance, it might be like less than a penny for them to like know everything about you. Versus like if you're using like a few simple privacy tools, then that cost goes up. Now to figure out what you're up to, they have to make a decision. They're like, well, is it worth it? Is this person actually a target? You know, and so then they have to prioritize and pick and choose, which is kind of what you want law enforcement doing anyway. You know, like I think it's kind of it breeds pestilence to give somebody too much power.
The Qantas Podcast.
So the impetus for this podcast was gold ripping to 5,500 a troy ounce at the time of the filming of this episode, and also our precious digital assets are down.
You know, it's been interesting to see how crypto Twitter has been coping with it. You know, a lot of the Bitcoiners, their whole identity is around number go up. So when the number doesn't go up, they get angry, they lash out. And I really see the crypto and, you know, precious metal communities as having a lot in common. I think, you know, they both generally want sound money. They're both sort of disillusioned with the whole fiat casino. And I think they're both like fairly small groups compared to the vast majority of the world probably doesn't think that much about monetary economics and the consequences of it. So I think it's really I consider it friendly fire. You know, when the Bitcoiners and the gold bugs are fighting each other, I try to get in the middle. Hey, stop! Like, cut it out. This is like, let's gang up on the people who are trying to enslave us. Yeah, you know, like and you know. And then they're like, well, actually, if you change the scope of time, well, actually, Bitcoin went way up more than gold. And like, good for you guys. Like, I mean, it's like, you know, again, you're still measuring it in fiat, and you know, we're just kind of like, you know, biting each other for scraps from master's table, you know. So, you know, I think it's cool, but it to be honest, it's a little alarming. Yeah, because I mean, gold and silver don't usually move that fast. It's like, so it seems like something broke in the system.
Yeah, it's kind of morbid, but there was a video circulating of a ski resort in, I believe, Switzerland, where it burned down and a bunch of people died, unfortunately, but the roof caught on fire, and there's videos from inside of the ski lodge where the roof is on fire and they're all still partying, and it takes a while for them to realize that, oh, this is actually all going down really fast and we need to get out. And there was a 30-second period where essentially the exit was still wide open, but the fire had began. And I saw a tweet that said, this feels like that, right? It feels like the dollar is doing okay against most of its foreign exchange pairs. I guess like there was some turmoil against the yen, I believe, but really all precious metals are ripping: copper, silver, gold. And I was looking up just the relative market cap. So in 2021, the crypto market cap was about the same as it is now at 3 trillion.
So 5 years ago.
Yeah. 4.5 years ago, 5 years ago, because the crypto market cap was quite volatile in 2021. But, you know, second half of 2021, the previous sort of all-time high for the crypto market cap was 3 trillion. And then it went down, recovered. Now it's still about 3 trillion, with Bitcoin around 90K or 85K in that range. And precious metals then was 14 trillion. So in the last 4.5 or 5 years, crypto has stayed roughly flat in market cap at roughly 3 trillion. And precious metals has done, you know, a 3x essentially to over 40 trillion.
Wow.
So yeah, almost a 3x in the market cap of precious metals denominated in dollars, while crypto is flat.
Yeah, I mean, I think there's, you know, we should, as an industry, introspect and be like, okay, it seems like, well, and also accounting for inflation, that must mean that if it's the same, well, the dollar inflated, so that actually meant it went down. Mm-hmm. So you know, we as an industry have failed to grow the pie, the sort of total amount of capital that's, you know, of course, also more Bitcoin has been issued, but then likewise, you know, for the market cap to stay the same, that means the price has to come down. Mm-hmm. So I think there's market cap is not the end all be all statistic, but it's a useful approximation of just like if you're eyeballing how big is something, take the current price and multiply it by the number of available things. But of course, it's like, if Jeff Bezos starts selling Amazon stock, like it's not going to stay at that price. So, when they say on paper, oh, your net worth is this, it's like, not really. There's no liquidity. You don't get unlimited liquidity at the current price. So I think, it's important to kind of like not take these numbers too seriously, but it does seem like, crypto is, I think it kind of lost its way, there was a lot of like, number go up, or let's do casinos, meme coin, you have like literally, heads of state issuing meme coins and rugging people, it's and we can't obviously blame them because like a lot of dummies bought that stuff, and including myself.
So not only heads of state, but cultural icons,
right?
Like the Hawk Tuah.
Yeah, I mean that was really if there was a top signal, I think and like Solana, amazing technology, incredible technology, but where does it go from here? It's like, okay, now you can trade precious metals and American stocks and you can get leverage on them, from anywhere in the world. And okay, that's cool. Where is there anything more there? I guess increase the liquidity. I mean, Fidelity is issuing a stablecoin, and they're doing it on Ethereum instead of Solana. Why is that? Probably because the depth of the liquidity. And so I think there's kind of I think the industry is starting to realize like, okay, we built this cool thing, and we're going to remake the banking system, and actually the banks are just like, okay, well, we'll just put dollars on your cool tech, and then bye-bye.
Yeah, and I think this 3 trillion market cap number also includes stablecoins. Right. So stablecoins between 2021 and now have grown by like 100 billion. They've gone from maybe at the top in 2021, it was around maybe 50 or 100 billion. Now it's probably around 250 billion or something like that. But also Bitcoin has grown pretty considerably in market cap since 2021. At the second half of 2021, it was 50 or 60K. Now, even though it's down on the year and it's down 20% on the 1 year and 5% year to date so far at the end of January, it's still up against the dollar from 2021. But a lot of the stagnation has been, I think, Web3. We saw recently that Farcaster has changed direction, I believe entirely shut down and returned money back to investors. And same thing with what was Lens, the other Web3 social platform, despite Twitter, X having some drama over the algorithm and people seeming to be unhappy about it. The solution of Web3 native social media, where you own your follower graph and anybody can build their own front end, and all of the posts and followers are open source, and you can take your followers to different applications. Like that idea of the Web3 social is dying at the same time that everybody is becoming increasingly disillusioned with X. So it's like the perfect time for a real competitor to emerge, and like that competitor looks like, at least for the text-based social media, it looks like maybe it's Substack, right? Which is not Web3 at all. So this whole Chris Dixon read, write, own Web3 thesis is just getting sort of totally rejected by the market. And the incremental gains in the crypto market cap are really coming from the sound money, Bitcoin, store of value, growing some, but nowhere near as much as precious metals.
Yeah, I think I would throw into that set of examples of Web3 social. I'd put Nostr, and which is sort of it's not exactly on a blockchain, but it's using some of the blockchain infrastructure, like it's using Bitcoin or Lightning keys as identities, and they kind of, and it's open framework for it's not that different from Farcaster. I've built on Farcaster and Nostr, and I think both of them have pretty good tech. I think Nostr is maybe superior in the sense of it's more extensible, and I don't know, somehow like it felt more natural to build on top of it. I'm delighted to see that like BitChat's building on it and stuff like that. But is is it going to, take over the world? I mean, it's kind of the network effects of both currencies and social networks are huge. It's once you're on there, I mean, the value of being on there increases the more people there are on there, right? This is like Metcalfe's law that the value of a network increases quadratically, because it's really about the number of edges in the graph, not the number of members of the graph. So yeah, it's I mean, I remember back, Steemit. Was Steemit the first Web3?
I don't know. I was never on Steemit.
I didn't really get into it, but it was, it was cool tech. Their tokenomics didn't really make sense, but we built in 2017. We built Lunar, which was like it was like Wikipedia on the blockchain. So not exactly social, but it was again one of these like, can you get sort of non-monetary or like semi-monetary ideas to work on the blockchain? And over time, I've become more of a like, okay, there's like blockchains are at some level databases, with fancy cryptography and networking in them. I mean, it's very cool, but do you need a blockchain for everything? Sometimes you do, sometimes you don't. I think really the one use case where it's clearly the winner is still money. I'd say even smart contract platforms, most smart contracts are not necessary. There's like, so I think Solana had this insight, be like, actually, there's like 8 smart contracts that actually matter, and then everyone can just use those, But I do think that the cryptography is in question. I think that serious people look at crypto and then they see quantum computing coming, and then they ask their technical advisors, and they're like, okay, what are the consequences of this? And it's like, yeah, it doesn't look like it'll always be as secure as it has been up to this point. I mean, you think about Bitcoin as an incredible bounty. That, if you could hack Bitcoin, you could get billions of dollars. So far, it hasn't really happened. All the attacks have generally been around against wallets or exchanges or individual users. But the system itself, like Dan Kaminsky, the famous hacker, he tried to break Bitcoin and he couldn't. And so there is a kind of real strength of that design, but it depends entirely on the cryptography. If the cryptography fails, then it looks bad. So you got to look at it from like, okay, there's all these like very confident Bitcoiners on Twitter that are, telling everyone that they know for sure quantum computing isn't going to come in the next few decades. It's not clear how they know that, but they're saying it very confidently. But if you're, say, a fund manager and you're managing like lots of other people's money and you have a fiduciary responsibility to be aware of all the risks, and you ask your technical and analysts and everything, and they tell you, yeah, look, I mean, there's no like in computer science or higher math, they're not like, yeah, quantum isn't a thing. It's like it's very routine to like analyze the security of, say, a cryptographic algorithm against both classical and quantum attackers. I mean, that's been the case for many years. So it's an advanced topic. So there's lots of room for like confusion and misinformation and charlatans to sneak in. But like the upper echelon of society is not sort of in doubt about whether this is going to happen. They're preparing for it, and I think. Even if you're a fund manager and you personally didn't think quantum computing was going to come, you would still think twice about doing it if everyone else is talking about it, because it could look bad for you, right? So it's not just the risk. There's 2 layers to security, right? You're building something secure. Is it secure, and then is it perceived as secure, right? And which is not just purely marketing. It's also about ease of use. It's also about if you've got, say, secure elections, but then nobody thinks that it's secure, well, then you have a problem, right? And it means that people aren't going to trust the result, and so having it easily auditable is important. Instead of if you're just like gaslighting people and you're like, no, like you're stupid because you don't trust this thing, like that's obviously going to have an opposite effect.
Yeah, I think there's a Warren Buffett quote: "Would you rather be the worst lover in the world, but everyone thinks you're the best, or the best lover in the world, but everybody thinks you're the worst?" So, I don't know the answer to that question.
Well, I mean, it depends on what you're maximizing for. Do you want more partners, or do you want to have a really good relationship?
So there's this dynamic of narrative causes a change in price. Maybe that's the case, or maybe there's price changing and that affects the narrative. And I don't know which, if it's a chicken or egg type thing. And
it's definitely a feedback loop, right? I mean,
Yeah.
they get into, spirals with each other, and the market is so big and complex. It really invites you to just kind of project. It's like the Rorschach test, You can just be like, why is it going up? Oh, it's, if you ask the astrologers, they'll give you an explanation of what, like if you ask, a child, they'll give you an explanation.
Yeah, and if you ask the guys building a quantum secure blockchain why Bitcoin is going down while gold is ripping, we're going to have an obvious answer, right? Do you really think that's the case? Because I'm looking at this number on my screen, right? Like the crypto market cap is stagnant. Web3 as a category, basically Bitcoin dominance is up while the crypto market cap has been stagnant and the precious metals market cap has been ripping. Gold, silver, sure, there's some industrial use cases or whatever, but I think it's pretty obvious, and I can say without injecting too much bias, that the reason for the price appreciation of precious metals relative to the dollar is some combination of the debasement of the dollar, more dollars, and relative loss of faith of the dollar and the US government against a sovereign store of value like gold. So then you look at, okay, well, for the past however many years, the predominant discussion around Bitcoin has been sovereign store of value. Then really what is causing the relative underperformance of Bitcoin? Because it's a much smaller asset. I mean, I woke up the other day and I looked at TradingView and I said, wow, gold added an entire Bitcoin to its market cap,
like not one Bitcoin, but all of the Bitcoin.
All of the Bitcoin to its market cap in a day, right?
Yeah.
Isn't that crazy? And then I woke up the next day, it did it again, right? So like two back-to-back 24-hour periods where gold added over 1.5 trillion or 2 trillion to its market cap, boom, just like that. I mean, it's just a phenomenal amount of money that is extremely price insensitive, seemingly, like the largest asset in the world moving like a meme coin. And we don't really talk about price very much. It's not something that we're obsessed about, but it's a
signal.
It feels like the roof is on fire a little bit, right?
Yeah, I was a gold bug before I was a Bitcoiner, before Bitcoin existed. I was a little kid and I started reading about gold, and I didn't have any money, but I was like, I liked shiny stuff, and I was like, I think it was actually a mistake for Bitcoin, for a variety of reasons, for Bitcoin to adopt the narrative that it was digital gold. I think that was a strategic mistake. One is, peer-to-peer electronic cash is a more accurate description of what it does. And I think, people argue about like what makes something money. Sometimes they try to split hairs on like this is money versus this is currency, and I feel like that's actually just it's just confusing to people who aren't experts in your domain. I think it's like, I like this idea that money is more like a behavior than a thing.
This sounds a bit like Bitcoin Cash cope.
I mean, I was salty. I was in the Bitcoin Cash camp, and then they just they couldn't get their shit together. I mean, they're still around, but it was like they kept getting divided over and over by these essentially social engineering attacks. And so I just went over to Ethereum because they were building shit. But to go back to, what makes something useful as money, right? We could use tables as money. We could use microphones as money. We could use gold as money. We could use, certain kinds of rocks. We could use art as money, like the fabulously wealthy do. But I think there's certain traits that make something better as money than something else, right? And is gold perfect money? No, I think it has certain advantages. It's very durable. I think, unlike what the Bitcoiners say, I think it's relatively easy to check that gold is actually gold. There's, it's not the cheapest thing, but you get a machine and you do a little drill and now you have to do it for all of them. So it's not free to check, but it's quite different from evaluating whether this Da Vinci painting is actually a real one. That requires extreme expertise and knowledge. So the verifiability is sort of it's good, it's not perfect. The subdivisibility, it's just a pure element. So in theory, I could give you tiny grains of gold, but in practice nobody does that. They generally they have it 1 ounce bar or 1 gram bars, and they have stamped by like, trusted brands and that sort of thing, or they have coins that have like, a premium because they have some historic or collector value. But so in theory, it's subdivisible, but in practice, it's less so. But it is fungible in the sense that like this piece of gold and that piece of gold in theory should be the same. Now, of course, purities differ, and like, there's so anytime you
it's actually awful. I think what I'm hearing is that the relative usefulness of the money is actually not directly correlated with its value or its ability to store value and grow over time. Like ultimately, what matters is not the payment network built on top of it or how easy it is to utilize. I think there are many data points with this, right? Like Bitcoin is much less useful as a payments network than Bitcoin Cash or stable coins on Solana, right? But Bitcoin has a much larger market cap than Solana. If you look at 2021, just as that benchmark, that snapshot in time versus now, Bitcoin is up, 25% or 40% or something like that. And Solana is down 50%, right? Ethereum is down 40%, something like that. So even amongst crypto, the inconvenient, predictable, old, boring, optimized for boomer-friendly store of value,
sure,
has performed relatively the best.
Sure.
Right? And the cool, hip, useful technology, the market has discarded because the primary sector that has experienced growth, if you zoom out, is sovereign money. Right.
Well, I think, it's not a winner take all thing. I mean, I think, Solana's not exactly worthless, but you're right. The market cap is much lower than Bitcoin's, and Bitcoin's market cap is much lower than gold. And so, part of this is a Lindy effect, the oldness of it, where it's sort of, if you're not sure where to go to the place that's been safe for a longer time. If times are changing really fast, then like look for stability. And the narrative of gold is fairly simple from the point of view of like it's just a rock, it's shiny. Which, by the way, the reason gold is yellow, right?
Yeah, it is. Yeah,
and whereas like most metals are like some kind of silver, right, or like metallic looking, right? They're kind of like gray, shimmery, right? So the reason for that is actually a quantum effect.
Yeah,
and so I think that's pretty cool.
What's the quantum effect?
I think it's a little challenging to express in just a few sentences, but basically there's these gaps between the electron orbitals,
sure,
and they actually get warped by the distance between these gaps determine the wavelength of light that gets emitted when it absorbs and then re-emits a photon. So there's this kind of like, it's almost like a chord in music, it's like the distance between the electron orbitals kind of gives you a certain flavor. And so anyway, there's relativistic effects where the electrons very close to the nucleus are going super duper duper fast, and that causes mass and space to warp, and it changes the relative distances between the electron orbitals enough that it gives you a different color, a different wavelength of light. And it's just a kind of like peculiarity of like the specific number of protons and electrons that just gives us this like kind of a coincidence almost that but it gives it this very distinctive color. I mean, like palladium in theory is like maybe more scarce or should be more valuable, or I think it is quite a bit more expensive. But like, why doesn't it have this same sort of like, it doesn't have as good of a marketing department because it just looks like a silver metal. It like visually it's like basically like silver. So there is something, I think there's definitely a monkey psychology of like shiny things, and particularly the gold one, the yellow one, it looks like the sun. And I think this sort of thing like shouldn't be discounted when you're like why do people like things? It's like how they catch a monkey in I think in India they have this technique for catching a monkey.
I'm sure it involves a shiny object.
It's a shiny object. They put a little hole, and they know like about how big to make the hole, and then they put a shiny rock in there, and and then so the monkey gets his hand in there and he grabs it, but then the hole's just big enough small enough where he can't get his hand out if he's gripping it. And of course the monkey doesn't want to let go of the shiny thing, so he'll just stay there. And of course then they can go and collect the monkey. And I feel like, we're not that different, like, I mean, like, if people I like shiny stuff. I see like jewels and like, or gems and stuff like that. And it activates something in me, this sort of like, like fascination and beauty, and like, it's almost mystical. So I think that is definitely a piece of the market cap of gold is, that monkeys like shiny stuff. So
the properties of money, scarcity, it can't be infinitely printed. Right?
Well, okay, so I would start at like how scarce it is, right?
Yeah.
Instead of making it a Boolean, like it's a float.
Yeah, of course.
Right, like, because it's sort of like if it's easy to inflate, like, you could use the leaves of trees as money, but it's sort of like, well, why should I take your leaves instead of going and just collecting some leaves myself, right? It sort of doesn't hold the energy that well from like a social point of view. And
so what is the failure mode for gold? Because in my eyes, for the relative growth of precious metals versus crypto is most likely some sort of indictment on crypto's ability to function as a store of value over a long period of time, a sovereign store of value, because I think that's where we really compete, right? It's the same sector, but there is a digital native store of value in many ways is better, right? It's got a built-in payment network. It's easily verifiable. It's easily divisible. You can travel across borders with it by just memorizing some words in your head.
So I think the place where Bitcoin shines the most over gold is actually the portability.
Yeah.
It's like, try walking across a border with $1 million worth of gold. It's like, it's not that simple, and they just want to know about it when okay, pirates.
Yeah.
So to me that's in some sense like the I think it Bitcoin made capital more free. It made it impossible to really hold capital in a country for motivated people, and so I think that's it was when Peter Schiff or the gold bugs were like, Bitcoin has no inherent value. I think this is like really kind of a very narrow-minded assessment. Like, the payment network itself is valuable. Like, the fact that I can update a global balance on the other side of the planet, and I don't have to ask anybody's permission, and it happens in 10 minutes. This is unprecedented. Like, even 2,000 years of banking wasn't able to achieve this. So, so in that sense, Bitcoin does have, or the payment network absolutely has some inherent value as a technology. And, and I think some people look at Bitcoin, they're like, okay, well, one, there's competitors to Bitcoin that are like similar, but different. And so is that a kind of like soft hyperinflation? The fact that you have like, okay, Bitcoin itself has limited supply, but then I can copy paste Bitcoin and make Litecoin, and then I can copy paste that and get Dogecoin, and so then you get this kind of horizontal scaling, which leads to a kind of like dilution of the quality of the digital unit. And I think it's a valid point. But ultimately, like, it's about like getting other people to acknowledge the thing that you built, like the network. That's really the network effect. And if you can't build the network effect, then you shouldn't expect the price of your thing to grow. And likewise, it's easier to build network effects around things that are genuinely useful. You can kind of psyop people into like, irrational behavior maybe for a certain period, but eventually people will be like, oh, if there's a better option, they're just going to take that option.
Yeah, but the vast majority of Bitcoin's usefulness is not actually in the payment network, but rather in its price performance, right? Like, Bitcoin ceases to be useful if gold goes up 2x and Bitcoin is down 20%. Like, then Bitcoin is no longer useful for the vast majority of people who are using it to store value over long periods of time. Like, that's the most common use case, in my opinion.
It's a good point, because I mean, I mean, there's one is this like, okay, by setting themselves as digital gold, they kind of directly put themselves in competition with gold instead of being like, say, instead of the Peter Thiel, like, find a niche where you can have a monopoly. Suddenly they're fighting with like the biggest asset class or one of them in the world. It's bigger than dollars now. So I think that was like, that was one reason why I feel like it was maybe a strategic mistake to use the phrase digital gold. But I think also there was another kind of like this store of value narrative is, I think it's useful up to a point. There was this sort of like, okay, there's store of value, medium of exchange, unit of account. And this was, these were sort of three different aspects of money that you can kind of like unit of account, meaning people can kind of think in or measure things with it. Medium of exchange being like, okay, well, you can use it to settle, debts and transactions. And store of value that it's like, over time it should in some sense retain its value. But prices always fluctuate. All prices fluctuate. There's no, even stablecoin is like a bullshit name because it's like it's stable relative to the thing that it's pegged to, right?
Yeah.
It's not stable relative to like anything else. So this idea that like we can sort of just isolate this aspect of money and focus on store value and ignore the other ones, I think this is a mistake. That you can't really surgically separate these things. Like if something has value, you could exchange. You could use it to exchange value, and you could also measure things in Bitcoin. I mean, for a while, all the exchanges were like, okay, we don't have fiat, so we're just going to measure things in terms of Bitcoin. Like, how many Bitcoin does your shitcoin worth? So likewise, like imagine trying to like, okay, like the thing doesn't store value at all. So then, how do you use it to exchange anything? Why would someone accept it if it didn't have value? Or if it doesn't have a price, then how do you so it's just sort of like these are, money is like this kind of complex behavior that we do. And so it's natural to try to like kind of look at it from different angles, but cutting off store value and then ignoring the others, I think is really confused. I mean, because Bitcoin's not stable. The price goes up and down and so some people understand money better than us, and they generally use that to their advantage. I think that's really what it comes down to. Like the people who are like expert level at money tend to be very rich, and they were bankers before, and they're like, okay, look, none of you fucking monkeys understand how this works, so let's play a game that I know how to win.
Yeah. So when we're 80 and looking back at this rally in gold, is this the beginning? Is there a point where we are vindicated and there is some reversion to the mean for digitally native monies, right? Like, because it almost feels like, to me, a very 2023 period where, people were more disillusioned and down bad. And is this the time to lock in and buy the bottom and build what's to come in 2026, 2027, 2028? Or are we all wrong and quantum is going to destroy the whole industry, and asteroid mining is many decades away, but quantum is almost here, and digitally native store of value maybe has another 20 years until its time has come truly at planetary scale. Is this just a period where it's going to be a prolonged lot of pain? Because I don't want to accept that in order to have a store of value that is unseizable and permissionless, it can't be portable and it can't be divisible, and I have to have a $20,000 machine to verify its authenticity. Like, gold is not an adequate solution for me. I think humanity can do better. I love gold. I'm glad that it exists. I'm glad that it exists at such a scale to where sovereigns and extremely large capital allocators can move into it in size and know that the liquidity is there. Like, I'm super happy that it exists, but I think for the average person who might be traveling across borders or escaping their specific country or trying to have lots of their net worth be private and unseizable, like, it's just not good enough, right? So I don't want to accept that this is the situation that we're in and we just all need to capitulate into gold now. So am I going to be poor because of that? Is my question.
No, I mean, I agree. I don't think gold is the end all be all, and we could use silver or palladium or oil or Bitcoin or some other coin as a kind of as a medium of exchange, as a store of value, a unit of account, and so So is gold the end all be all? Absolutely not. I don't think so. I think we can do better. And I think that there's another aspect to this rally that I think is like if you're deep in precious metals, you've probably heard of like the silver short squeeze, or like people say, oh, the paper silver outnumbers physical silver up to by like a gigantic factor, like something like 100x. And there's this whole futures market around precious metals, and people said for many years that this is highly manipulated. Is gold the end all be all? Absolutely not. I don't think so. I think we can do better. And I think that there's another aspect to this rally that I think is like if you're deep in precious metals, you've probably heard of like the silver short squeeze, or like people say, oh, the paper silver outnumbers physical silver up to by like a gigantic factor, like something like 100x. And there's this whole futures market around precious metals, and people said for many years that this is highly manipulated, that people can essentially short sell silver because you can print paper silver, but you can't print physical silver, and that this is used to essentially suppress the price by inflating the apparent supply of silver, and it seems like something broke with regards to that. People talk about COMEX, the amount of physical on COMEX, which is one of the big precious metals exchanges, and that people have been withdrawing lots of physical. Like I read that 25% of their what they store physically was removed very quickly. So and it's also like when trust breaks down, people are like, okay, like I need to get my money out of this trusted third party because they're no longer trusted. And I mean, this was a big part of like how the petrodollar standard came about. There was like after World War II, everybody's using dollars. America was holding everyone's gold because big boss America, and then at some point, the French and the Europeans were like, I feel like there's a whole lot of dollars floating around, and I feel like maybe you don't actually have the gold. And so like, could you give us our gold back? And they started repatriating it, and at some point it became kind of an issue, because so they said, okay, we're not doing the gold standard anymore. Forget the gold standard. It's an archaic metal. We're going to do Saudi Arabian oil. That's going to be the new thing, And they're like, listen, Saudi Arabia, just like we'll give you weapons and like unlimited treasuries, but like just make sure everyone uses dollars to transact in oil, and that worked for a while. And I think it was Gaddafi, wanted to make like a kind of gold backed currency that for Africa that he wanted to transact in oil, not with dollars. We saw what happened to him. But
yeah. And that's really interesting you point that out, because the period of time, the 25 or 30 years where gold was extremely stagnant in terms of price performance were the decades of the post-world order and American dominance and the petrodollar, and probably the top in oil demand, as well as now we see, solar's had dramatic improvements in cost effectiveness, and people are getting much more optimistic on nuclear and scaling nuclear, and more electric vehicles are coming online, and probably in the coming decades, oil is going to be less geopolitically important as it was during the post-world order and the peak of the American empire. And we're kind of seeing the unraveling a bit of the American empire and the debasement of the dollar kind of going parabolic, and oil not going parabolic, certainly not collapsing in dollar-denominated terms, but it is collapsing in gold-denominated terms, right? So that's interesting. That's interesting.
It is.
That's I haven't thought about the period of American empire dominance and the petrodollar, and and correlated that to the 30 years or so where gold struggled the most, right? And American equities performed amazing.
Yeah, there's, it's hard to get, you can't get that far from energy, like in terms of, oil and money are right next to each other. A lot of like mystics will say that money is just a form of energy. And we see with Bitcoin, it's like you spend energy to turn it into Bitcoin. That's the Bitcoin mining thing. And so, and with money, you can compel, persuade other people to do things, and so in that sense, it gives them energy. And so it's so I do think the energy market is some kind of like the hidden hand behind monetary economics. Like if they shut the sun off, then your money's not going to be worth much, right? It's like, imagine like you print $1 trillion and then you go to the moon and then you try to spend it somewhere. Like obviously it's other people who give this thing value, like. And let's say you bring you and all your friends to Pluto with $1 trillion, but it's like, it's so cold you can't fucking do anything. You're like, well, okay, like it turns out you don't just need money, you need the sun, and you need plants and animals, and you need water.
This sounds like some hippie nonsense that I'm too rich to hear. So just kidding.
No, it's like ultimately it's an abstraction layer around things, because even these properties of money like fungibility, like dollars aren't completely fungible. They have serial numbers, and sometimes they track your and sometimes like if you've tried recently to like take your dollars to a bank, many banks are like, oh, sorry, this one's like slightly bent, we can't take this one, because they're trying to like, they've got a mandate to like push physical dollars or physical paper money out. And then there's also, like sometimes money just like, you spill your coffee on it and things like that. So sometimes people counterfeit money. I think this is another important trait of money, is how difficult is it to counterfeit. It's never impossible to counterfeit, because ultimately counterfeiting is like a psychological thing. It's like you're convincing someone to accept a fake. But, Bitcoin, like it's hard to counterfeit. Gold, it's not easy to counterfeit, but if you're motivated enough, you can make fake gold, wrap tungsten in a little bit of gold and then, and just wave your hands and hope that the guy never checks. But none of these things, it's never perfect. Bitcoin isn't perfectly fungible. And I think this is Zcash's, valid criticism that like every Bitcoin, every Satoshi has a history. And that's why they were able to pull this hack off of the ordinals and basically put NFTs on Bitcoin, even though like a lot of the Bitcoiners didn't want them to do it. But they're like, actually, well, there's a canonical ordering of the Satoshis that you can imply by like the time when they were ordered. And then, as you have a sort of first in, first out assumption as you transfer the Satoshis around. So now the Satoshis are unique, and wow, now we can do collector's shit on it. And now they're no longer fungible. And so this idea of fungibility is really like, it's an abstraction layer, and it leaks sometimes. And so, is gold perfectly fungible? It's not, actually.
I mean, gold is pretty fungible, right?
Yeah.
Like it can have a history, but it's got a melt value. And if I take a whole bunch of gold and I melt it all together and then I split it up into a bunch of different coins, it's
pretty much the same, right? Yeah. Now, if you get deep into if you're really, depending on what level of gold bug you are, people do start being like, okay, which mine was this from? Because people, the collector mindset, it can just latch on to anything, and also there's maybe slight purity differences, or in terms of like how pure is it versus like what are the impurities. And, because it's like, that's what makes, say, crystals different colors, is like slightly different impurities. So it's, but if we think of it not as a Boolean, but as a float, it's like, how fungible is it? Gold's pretty fungible. And also Bitcoin is pretty fungible. I mean, the government can try to say like, oh, these Bitcoins are blacklisted, but, in practice, you can sort of shred it and reassemble it. And,
And I have stats on Zcash here. So Bitcoin 1 year price performance is down about 20%. Gold 1 year price performance is up about 100%.
Wow.
The NASDAQ is up 20%. The S&P 500 is up like 15%. Zcash is up about 700%.
Wow.
So even though it started off 2026 rough, it's still 1 year price performance is up about 7x. So the market is, it's a very small asset relative to Bitcoin and certainly relative to gold.
Sure.
But it is the predominant privacy coin, right? Zcash and Monero. And it seems to address the core issue that Bitcoin is, we believe Bitcoin is struggling predominantly because of its quantum risk. And I think there is a discussion to be had about how Zcash addresses that. But the predominant narrative is that it will or can address it with future updates. And that asset, that's a privacy enabling asset that is maybe handling the quantum risk better than Bitcoin, is up about 7x on the year. So I think that's another interesting data point to throw in the mix.
It is, it's, prices, technical analysis, some people say it's astrology for men, so I don't want to read too much into it, but I think there is some signal in there. Bitcoin is not perfect. How could Bitcoin, I think there's three things that could be improved about Bitcoin. One is the quantum security, two is the scalability, and three is the privacy, having a sort of transparent chain, that was not in some sense, it was an unintentional design decision. It was harder to make it private. I mean, we can read in the Satoshi emails, they discussed if there was some way to use zero knowledge proofs, that it would be, that it could be made, Bitcoin could be made much better, but they just didn't know how to do it yet. It was complex to achieve that. And the thing is, these things are naturally in tension with each other because, making it quantum secure means bigger keys, bigger signatures, which then impact scalability. But also privacy also impacts scalability because, so both Monero and Zcash have this thing where, if you want to figure out which shielded or sort of just normal Monero transactions are yours, for a few different reasons, you can't just ask a server, be like, hey, tell me what my balance is, because because of the way the cryptography works, you can't anticipate exactly what the transactions that come to you would look like. So with Bitcoin, you can, whoever, say a full node or somebody who has the database of transactions, the blockchain, can index it based on the addresses. And then you'd be like, hey, give me all the transactions with my address. And so then it's relatively easy for the blockchain to serve that request. But in the case of, say, Zcash's shielded transactions, they have, ledger indistinguishability. So all the transactions essentially look the same. And so for you to figure out which ones are yours, you basically have to download all of them and then try to decrypt all of them. And so, and Zcash is trying to address this with their Tachyon upgrade coming in the next year, I guess. And but it's sort of, it's a kind of, you're kind of fundamentally in tension there. It's like, how much information do you want to give away? Because the more you digest it and index it, then the less private it is. The more you're revealing about the under. So I think, we've taken a very practical approach to this. It's like, by saying, okay, we need scalable privacy. And, zero knowledge, the Zcashers, they're kind of, in a good way, they can be kind of fanatical, in the sense of we want to have absolutely no information and be leaked, but in practice, it's nothing is ever perfectly private. Nobody's impossible to eat. Nobody's impossible to spy on. It's really kind of making it inconvenient so that I've got super secret Zcash, right? But then my mobile wallet talks to an RPC node, and the RPC node then knows that I'm interested in Zcash, right? And it knows when I open the phone, and then it's like
maybe your IP address.
Probably also knows my IP address unless I connect through Tor. All these things have solutions. None of them are insurmountable, but in practice, nothing. You're not invisible. And if you get targeted by personally targeted by a nation state, or an intelligence agency, you're kind of fucked unless you have another intelligence agency to back you up. It's you versus a bunch of smart people ganging up on you is difficult. You're just, there's a fundamental power asymmetry there. So I think this is, to me, the goal of these privacy tools should be, let's make it easy for the average person to be pretty hard to spy on. It's with mass surveillance, it might be less than a penny for them to know everything about you. Right. And versus if you're using a few simple privacy tools, then that cost goes up. Now to figure out what you're up to, they have to make a decision. They're like, well, is it worth it? Is this person actually, a target, And so then they have to just prioritize and pick and choose, which is kind of what you want law enforcement doing anyway. Like I think it's kind of it breeds pestilence to give somebody too much power, and most people don't need to be spied on. Most people are not terrible criminals. They're just like trying to live their lives, and they're decent people. And so like putting everyone in this surveillance prison because the dictator's terrified of what might happen if they figure out what he's up to, like this is like a dark timeline that we don't need.
Yeah, and at least in the United States, the Fourth Amendment gives you really the right to privacy. You have the expectation of privacy. It's just that over the last few decades, we've given all of our information to the social media companies and the internet service providers and all of the middlemen involved in our communication and affairs. We've given all of our money over to the banks and other third-party custodians. So essentially our right to privacy has been eroded, not through any legal or certainly not moral justification, right? But really just through a practical you don't own your information or your money, right? Third parties own your information or your money. Those third parties care a lot more about being in the good graces of the intelligence agencies and the regulators than they care about being in the good graces of any one particular customer. And there's really no mechanism, there's no way for the consumer to really express a desire to maintain their privacy in their banking and finances or in their information with the social media companies or the internet service providers or the email providers, these sorts of things. So really, yeah, we're in this situation of mass surveillance of your communications and mass surveillance of your financial affairs. And there's really in the United States at least, a strong legal and framework and a moral history of that not being the case, right? So all we have to do, I say, all we have to do, but it's actually very challenging, right? Sure. All we have to do is build the technology in such a way so that it is actually better and more convenient, and then the consumers will come there. And if you build privacy and security into that technology, and it doesn't have to be totally secure against the eye of Sauron, if it zeroes in on you, okay, you're probably screwed. But just adding a meaningful amount of friction to mass surveillance of people is, I think, now technically achievable in the realm of finance, right? Maybe that wasn't the case certainly before Bitcoin. That wasn't the case 15 years ago because we didn't have the technological implementations of zero knowledge proofs and blockchains so that we could scale and have privacy. And it probably also wasn't the case 8 years ago during the invention of Zcash because we haven't figured out how to scale privacy yet. But are we at the point in time where we can have the sound money with a payment network, the 21 million, right? The scarcity, the scalability, and the privacy all together, and put that in a package to where it's consumable, it's usable, and it can scale to the whole world. Are we there?
I'd say probably. I'd say not 100%, but I think we're not that far. I think it's more than 50% of the way there. And, it's, I think PGP is a great example of that was made in the 70s. I think Phil Zimmerman, was a programmer, and he was like, oh, cool, you can use, oh, wow, encryption is legal for everyone to use. Why don't we do it with email? Amazing. So he makes it. And then I think we actually know from some Freedom of Information Act stuff that basically they're like, okay, well, we can't uninvent this thing, but we can make sure that only hyper nerds can use PGP. So there was an intentional effort to keep it unusable because it massively empowers the individual. I mean, this was the whole cypherpunk ethos was like, hey, look, the individual only has so much power, but if you can use widely deployed cryptography, then that shifts the balance of power away from these centralized repositories of information, because it's think about the power asymmetry. If one small group of people knows everything about everyone else, and everyone else knows nothing about them, right? It's like they're invisible, and so it's a tremendous asymmetry, and of course that kind of power asymmetry will breed abuse, because it's like, I mean, think about how we treat chickens, right? Just like there's very few people who really are like, oh, think of the chickens. It's like, well, no, it can't do anything about it. We put it in we literally let it could fly away. It has fucking wings, and yet it just sits there and lets me take its children and eat it. So like, maybe it deserves it. So can we not be chickens on Sam Altman's farm? Instead, let's let's toughen up. We're maybe individually we're not as powerful as the lizards, but like we can gang up. We can organize. We let's play to our strengths as a species. And so I see that is, that's where privacy tech comes in for me, is, privacy for the individual. And hey, while we're at it, let's advocate for transparency from governments. If we're going to have a surveillance chain, maybe we should put the government on it first.
Yeah, let's flip the power dynamic to where the people are invisible and the government is highly surveilled.
There's still examples of of good leaders in the world, and I think we should try to get more of those and less of the people who are just like lying to us and stealing from us and taking all your shit and like leaving the country with it. I mean, that's unfortunately that's very common. So, but who wants privacy tech? Well, also politicians who are stealing from their countries also want. It's like both predator and prey use camouflage, right? So in some sense, it shouldn't be controversial that people want some degree of privacy. It's very normal. What do you think is coming next?
I hope that we get some reversion to the mean in the pricing of internet sovereign money versus precious metals, tangible real world sovereign money. I think that's the case, but I don't think that's achievable until Bitcoin or another highly respected, high market cap crypto asset is able to achieve some amount of privacy or resistance against at least mass surveillance and quantum security. So
yeah. I'm more bullish on Ethereum now than I have been in many years. I mean, I feel like Vitalik kind of like got his shit together and like took on the mantle of leadership. He's he can be kind of naive sometimes about politics, but I think he's also very intelligent and wise. And he's like, hey, Ethereum is about freedom and yes, Ethereum privacy, yes, Ethereum quantum security, and they've got some new ideas to use ZK to scale it. So I generally, it's definitely more difficult to steer a large ship. It's going to take more time. So, I mean, our strategy at Qantas has largely been like, listen to all the good ideas that come out of his mouth and some other people, also the Zcash people, and just like, okay, what's our advantage? We're faster because we're small and we're sort of AI native, so we can go really fast. And that's been our strategy.
Yeah. I mean, we're looking at a really rapidly changing environment. I mean, just in the last few years, basically the app chain approach, like Cosmos, the whole Cosmos ecosystem has basically gone to zero. And then we saw a decent amount of success in Arbitrum and Base and the L2 thesis, but from a user and network standpoint, and the velocity of stablecoins and these sorts of things. But then the hyper success of Solana from a usage perspective and a retail usage perspective kind of made everybody come to this conclusion. Is like, actually, we want to scale one state, right? We want somewhat of a monolithic chain. And that eventually caused the Ethereum crowd to say, okay, maybe this L2 leaning into the app chain thing is probably bad because Cosmos is entirely dead and Solana is growing very rapidly. And yeah, L2s are kind of working, but it's really Base, right? So maybe the solution is to scale Ethereum L1. Maybe the solution is to integrate some of the ZK stuff so that we can scale it and also make it private. And then, there are a handful of smart contracts on Ethereum that are actually useful, like the ability to swap one asset to the other, and the ability to use Ethereum as collateral without really any trust assumptions. I think that's also quite powerful. So yeah, it gives me PTSD maybe to be bullish on the ETH-BTC ratio. I don't know if I have the gall to be on the internet saying personally I'm bullish on the ETH-BTC ratio. That seems to be a very
it's a dangerous place to be honest, historically.
Yeah, it's historically a dangerous place to be, but yeah, their approach to privacy and scalability and quantum security gives me a little bit more comfort than Bitcoin. And then so we have really a landscape of Bitcoin is ossifying and maybe not dealing with this quantum thing the way they should, but people know it, people trust it. We have Ethereum, which is still struggling a bit to scale, but has made meaningful improvements in the last couple of years and increased the gas limit and these sorts of things. Solana, Zcash, and then maybe a host of other equity-like instruments. I mean, Hyperliquid was up like 50% in a day the other day. But yeah, I think it's kind of in a category of its own and they're separate. So yeah, there's a landscape of internet monies, and we're fighting for who's going to be the most private, who's going to be the most scalable, who's the soundest money. And yeah, we're at least in the office every day. That's kind of all the ideas that we're ingesting. And how do we take this landscape, at least make sense of what the market is telling us is working, and integrate all those to the best of our ability before mainnet.
Yeah, because the scalability and I mean, a lot of this really comes down to the user experience. Like if you're expecting your users to like be experts on monetary theory or cybersecurity experts. Like if that's kind of like who you're building for, of course it's going to be a very small group of people, and you say, okay, well, the midwits follow the smarties. Well, sometimes, if the thing is genuinely hard to use, I mean, like Signal private messenger was the first time that secure communication was actually as easy to use as a normal messenger, and that was the difference between, like going back to PGP. This whole, I don't know if you read the story, Glenn Greenwald and he was contacted by Edward Snowden, and Snowden was like, hey, I have this really great, I have this really great story for you. It's really important, but I need you to get on PGP. And Greenwald was like, no thanks. And then so Snowden had to come back to him several times over months to get this story to Glenn. Wow. And look, Glenn Greenwald is not an idiot. No. But the sort of, the challenge of integrating encryption into your email client at that time, it was a mixture of the tools weren't that easy to use. It wasn't built into the tools, but then the tools that everyone was using, and then also, I think there is this kind of like almost an anti-mimetic field around cryptography that people feel like it's scary. It has the word crypt in it. It's like Tales from the Crypt. It's like, it sounds like arcane magic that's dangerous to touch, and like in some sense it is, but like the whole Snowden thing almost didn't happen because Glenn Greenwald, PGP, difficult to use, whereas if it was, deeply integrated into the tools that everyone uses, in the same way that TCP IP is invisible to most people and you don't have to know about it to use it, encryption should be like that. And, we've come a long way since Snowden. HTTPS is generally, ubiquitous, and, but it's, I think there's still a long way to go.
Yeah, and you don't need to be an expert right now to use Solana or Ethereum, but if you're not an expert, you will eventually lose all your money.
It's kind of like it's just a matter of time until you click the wrong button and you send it to the wrong address. And I recently interacted with an elderly person trying to send money on Coinbase, and I know Coinbase has tried really hard to make this easy for a lot of people, and it was just like, it was confusing for me because they were trying to rename things to make it like, and unfortunately, like this fragmented state of like many blockchains, different layers, different address types. I think it's overwhelming for the average person. The average person wants, even having a bank account is like an achievement.
Yeah.
So I think, I think what the crypto industry needs right now is really humility and be like, okay, like we were trying to replace the financial system. We made some progress, but then we kind of like got our asses handed to us because, let's try again. But like, let's think about the people we actually want to help, right?
Yeah.
You want the whole planet using your crypto. You want to liberate the planet from, financial slavery. Cool. You need to like interact with the average person.
Mm-hmm. Yeah. If you want to liberate the world from financial slavery, the capital rails, the infrastructure, it needs to have privacy. It needs to be scalable. It needs to be sound and have a good monetary policy. And then if you add another leg to it, it needs to be practically usable so that somebody can use it many, many times for many, many years without losing all of their money. Which sounds simple, but it's actually kind of difficult to build.
Well, we're working on it, so inshallah.
Yeah.
Samalama ding dong.
Bye-bye.